But in many cases, large corporates are not moved by enthusiasm, by passion, by emotion. They just want to see the data. They want to know what kind of a risk they're taking, and they want to see hard evidence that it's not going to, cause a factory process to fall over. And they want the technical validation. And everybody in a large corporate is, whether they believe themselves to be or not, are largely working to manage risk. And if you're in a startup, you're not managing risk, you're managing uncertainty, and you're generating, passion and enthusiasm, and you're selling a vision, because you don't really have that much probably right now to point at.
Welcome to the Lab to Market Leadership Podcast. Too many advanced science and engineering companies fail to deliver their innovations from the lab to the market. We are on a mission to change that. My name is Chris Reichhelm, and I'm the founder and CEO of Deep Tech Leaders. Each week, we speak with some of the world's leading entrepreneurs, investors, corporates, and policymakers about what it takes to succeed on the lab to market journey. Join us. If you're an entrepreneur trying to get on the radar of a large corporate, you need to listen to this week's podcast. I'm talking to Stephen Cook, who was a 22-year executive with BP. He served in commercial and strategy roles and had a hand in setting up and running BP Launchpad and, for a little while, BP Ventures. Now, Launchpad was BP's accelerator group for growth stage companies, and Ventures was their corporate venture group. And so Stephen brings with him the perspective of operating in a corporate and dealing with startups, operating within an accelerator and a ventures group. And more recently, he's been working with startups in his capacity as a non-executive director, advisor, and chair. So I'm hoping to speak with Stephen really about what it takes to just get on the radar, the journey, the lab to market journey involving corporates, how they see startups, and what startups can learn from the corporate perspective. Let's have a listen. Steve, thank you so much for joining me.
No problem at all, Chris. Great to be here. Thanks for having me.
A pleasure. This is all about how to get companies from labs to the market. And I'm really grateful to have you on because you bring some really interesting perspective to this. You bring the experience of being at a leading energy major, so the corporate perspective. You've played a number of roles at that major, including as investor and as leader of an accelerator. So you've got that perspective, and now more recently, with your experience in startups, you also bring experience from that side of the table. So I think our audience is going to be very interested in hearing what you have to say. Where I want to start, though, I want to go back to the corporate experience, which I know you've been out of now for a couple of years, but I want to start there. And I want to pretend that I'm an energy technology entrepreneur, and I want to somehow get on BP's radar. How do I do that?
It's a very good question, and there's a lot to a potential answer to that. But I guess the first thing I would say is it's hard to do it. It's difficult. It's complex. It's multifaceted. It's grueling. And I wouldn't want to pretend otherwise. I mean, people, I'm sure, get lucky in some instances and have a great ride through a corporate conversation into something productive. But even when the willingness is there on the side of the corporate, I would say, expect it to take time, expect it to be hard work, expect there to be periods of silence where nobody seems to be responding or is sort of lost interest. Yeah. So that's the first thing to say is there's no two ways around it. These kinds of conversations and getting them to some kind of conclusion are hard work.
Where should I start?
Yeah, and so that's the first thing is I would say there are probably two or three really important things to think about. The first is what do you understand about that company's the corporate strategy? And there's an
Mm.
awful lot out there in the public domain if you do some homework that you can glean about a company strategy, and that's not just looking at the annual report. It's listening to investor presentations, and the Q&A are particularly sometimes quite revealing. You can access those through most companies' websites, investor presentations. Um, you can look at where current partnerships are, where investments have gone recently, um, speeches from the CEO. So doing some homework about the strategic intent, the strategic priorities, and where the money is really being invested in that company is a really important place to start. So try and understand what's strategically important to that customer or that company that you're targeting. That's
Yeah.
the first thing, right? Um,
Yep.
the second thing is how do you start a conversation with an enormous multinational company? Who do you start a conversation with? How? Um, and what I would say is for a lot of tech or deep tech entrepreneurs running startups that are highly technology oriented, targeting somebody in the innovation groups of these large corporates is probably a good place to start. And that
Yeah.
the innovation group is a deliberately sort of amorphous term I've used there. It can cover the R&D organization. It can cover corporate venture capital groups. It can cover the teams that are running incubators and accelerators in those
Yep.
companies. Um, so all of that, and it can sometimes even cover people who are looking at business model innovation rather than necessarily technology innovation. So um, reaching out, and you can quite easily find out from that corporate's website what kind of innovation group that they have, what kind of activities go
Yes.
on there, and then through LinkedIn or the contact page on those websites, you can usually find a specific way into somebody who wants and is interested in new ideas in the broad domain that company operates. Um, so that typically is a good starting point, I would say, um, and you
Can
also, I
these
think,
innovation groups, though, if I jump in there real quick,
yeah.
can these innovation groups, can they help me identify where the pain is likely to exist within the corporate? Take, for example, in the case of BP, would the innovation group be really understand where the pain points are held within the broader organization?
I mean, the obvious answer is that they should do if the organization is
Yeah.
working properly. That's not always the case, though. And in many cases, I think my experience would say that the people in those innovation groups can be quite medium to long term focused and thinking beyond the immediate
Mhm.
pain points horizons of the operational entities. Um, but asking those kinds of questions that you just posed to me, I think, is a super
Yeah.
important way of trying to flush out who knows what. Because in some organizations, the innovation groups are very directly connected to the operating units and
Yes.
have a very specific remit that takes them out only 5 years. And so understanding what the remit of those innovation groups are and the time horizon in particular, and whether there's a marriage between the time horizon in which you're looking for something as a small company, whether that's a purchasing decision or whether that's help with
Yeah.
data or operational asset access, is a really
Yes.
important thing to understand. Um, and it
Will
also, I
my
think,
size and my stage of development, will that kind of determine where I should go roughly within the organization, where I should start from?
yes, definitely. That I would say, and what I was also just about to say was that it's the maturity, but also it's the kind of um, deal that you're trying to strike. Are you looking
Mm,
for investment? Are you looking for a place to do a pilot? Are you looking for
mm,
validation of your technical solution? Are you a bit more mature and are you looking to sell a productized solution? Um, But I think in most cases, somewhere in the innovation group, and like I say, I do include corporate venture capital groups and incubators and
Yeah.
accelerators that are run by these corporates
Yeah.
as part of that broad innovation unit. They may not sit in the same place in the organization, though. Sometimes a corporate VC group will sit in the finance organization, or it will sit in the
Yes.
strategy organization, not in the
Yeah.
technology or R&D organization. So um, they may sit in different places. But yeah, the maturity is important. So if you are a very early stage startup, a seed or pre-seed stage startup, then you're in all likelihood what you're looking to do potentially is to participate in an accelerator or an incubator program that corporate is running. And there are several of those, and they run very
Yes.
public processes to participate, and they're very clear sometimes about the problem
Yeah.
statement that they're trying to solve or the theme area that they're trying to attract solutions into. So that's a good place to start there. Corporate VCs typically, start investing a little bit later when there's some more clarity about what the product is, some early revenue from some initial commercial contracts, and then there's potentially a line of sight to deploying something within the holding period in the portfolio into the corporation.
Yeah.
And so that's if you're looking for that kind of support. If you're looking to sell into
Mm.
that corporate with something that is something you've sold a couple of times before to others, and you're now looking to expand your customer base, then I still think quite often it's the innovation group that is a good place to start, because they can
Okay.
then work to connect you into different bits of the organization. It's very difficult, for example, to directly approach an operating unit or a manufacturing unit, even though they may have a very acute problem. Those
Mm.
people are likely to be consumed with the sort of tyranny of the urgent in their day-to-day lives, and are not going to have the time or headspace to engage with a small startup in thinking about what they
Yeah.
could offer or innovate. Their remit is typically not to innovate, is to operate. And so they can be very
That's
useful.
that's really interesting what you just said there, actually. You said their remit is to operate, not innovate.
Is to
And
keep the
so
plant going, is to
it's
make
to
sure
keep
it
stuff
doesn't
going.
break
Exactly.
and
Yeah.
stays online. They're typically thinking about uptime, availability, resilience,
Yeah.
and cost.
So I think that's a really interesting, reflection, because so many companies that I've worked it with, you've probably seen too, they get this pressure from their board. They have some kind of novel platform technology. They're still in the process of turning that into a solution. So they don't fully know where it starts and ends. They think they, have a sense. They may have a little bit of validation, but they're seeking more. And
Yes.
so they see a big beast like BP as a source of a first potential contract and that validation and a partner for the pilot and maybe an investment and all of these things. How in your experience, how likely are each of these things to happen typically?
I think the get out answer there is it depends, but I'll say a bit more than that, which is
Yeah.
um, I think, yeah, and you're alluding to in your question. I think it's really important to be very clear as a small company approaching a large corporation what it is that you want, and to be able to articulate that in a very clear way. So, are you looking for
Mm.
access to data? Are you looking for a place to do a pilot? Are you looking for the first commercial deployment opportunity, and therefore they're going to be taking some risk? Are you looking at them as a customer, an early adopter, third or fourth deployment, or are you on a
Mm.
scaling journey and you're simply approaching them as part of your funnel? Because
Yeah.
within all of the answers to all of that will be held by different people in the organization, and also the degree of risk that you're expecting that corporate to take will differ enormously depending on the answer to the kind of place you're at. And so what I've found, I think, in my experience at least, is that there are a lot of small companies who are not clear enough, I think, about what it is that they want, what will help them take the
Mhm.
next step in their journey. And then the quid pro quo, or the other side to that coin is: are you clear enough about what value you think you're offering the corporate in return? Um,
Yeah.
are you offering them, in return for taking some risk as an early adopter of your product or investing in you? Are you prepared to offer that corporate some exclusivity? Is difficult, but um,
Yeah.
some priority access to your product
Yes.
should it be successful?
Yeah.
What's the value proposition that you're trying to frame here? So
Yeah.
the clarity of what you give and what you get in return, and being able to frame that for a likely somebody on the other end of a conversation in corporate who has very little time to frame it for themselves, is super, super helpful. And it sounds obvious, it sounds stupid, but the more you can make these things clear and obvious to people, the better sort of progress that you're going to make.
I think again, I think that's a really insightful piece. Often companies go and they come to a group like BP and they engage in these kinds of commercial discussions. And it's almost like, because of where they are in their stage of development, it's almost as if they're seeking validation, but they also need additional insight.
Yeah.
And that demands that someone from BP is going to work with them to build out their proposition, to help them build out the rest of the solution, to
Yes.
help them figure these things out. And these, as you mentioned earlier, these people have 300 other things to worry about apart from this company. So unless you're solving the mother and father of all problems for them, which you're probably not from the sound of it, then why should they help you if you have this much still to figure out?
Yeah, exactly. And so we've talked about understanding the corporate strategy. We've talked about a couple of different entry points, and we talked about clarity of what we want to give and get from
Yeah.
a relationship. I think the next thing is the um, the willingness and ability to ask some quite specific questions quite early on in the
Mhm.
conversation. Should you get into that conversation?
Mhm.
Um, and the reason I say that, and I'll go on to what those questions might be, but the reason I say it's important to do that is because the cycle time for an investment conversation could be 4 to 6 months, but going
Yeah.
through the pilot, demo, and commercial contracting process could take between 12 to 18 months.
Yeah.
And so the kind of questions that I'm thinking about asking at quite an early stage in any conversation are things like: who is the decision maker in this process? If for a pilot or for a commercial buying decision, who makes the decision? Who has the
Mhm.
budget to fund that? Who else needs to be involved in order to sign that off? How long do you estimate it's going to take? Do you have an idea, or can you tell me which of your assets you might choose to deploy this technology or solution in first? And through those kinds of questions, I think you can quite quickly get a sense of whether the person that you are talking to understands how commercial decision making happens in that company, and how commercial contracts eventually get signed. And if they don't understand that, then that's a red flag. And if
Yeah.
they do understand that, and then do not bring some of those people into the conversation along the way, that's another red flag. Because what you don't want to do is be thinking that you're talking to BP or GE or whoever large corporate you want to choose to talk about, one of these large corporates, and think that they are a homogenous entity where you're having one conversation with the entire entity. And of course, you're not. You're having a conversation typically with an individual, and that individual may or may not be properly connected into the bits of the organization you need to reach. So you need to find that out. And otherwise, you're at risk of having a super interesting conversation with somebody who is personally and professionally very interested in your technology and your company, but will not be
Yeah.
able to help you. And that's a lot of wasted time and effort, and potentially a lot of uh, kidding yourself that is going on in terms
Yeah.
of whether you're making real commercial progress as a startup.
How often did you see that?
Um, Too often, and a number
Mhm.
of times on both sides of the table where um, it was clear that, and it depends on the organizational structure, right, and how these things are set
Yeah.
up. But certainly in BP, we had marooned islands of super technical people who had a remit to talk externally and would get companies very excited without the ability to progress that into anything meaningful.
Mhm.
That that happened a lot, and I've certainly seen it on the other side of the table in startups that I've been working with, where they think they get super excited because they've been talking for
Yeah.
3 months to a corporate. It's a blue chip organization. It would look great as a customer, but when you press a bit, it becomes obvious that they're talking to one person, and it's
Yeah.
not moved on. So, and it's there's no contract or terms or talking
Yeah.
about actually implementation in any meaningful way.
So there's a piece around kind of, courage and bravery required here and complete honesty. And the reality check about where things actually are, because obviously entrepreneurs have a tendency to always see the glass half full. They've got to be optimistic.
Yeah,
I think it's a key characteristic. It's a key feature, but equally, there's, this presses home the need for being completely honest and qualifying these things so that you're not wasting time and having the courage to go back to boards and investors to let them know, actually, we've been talking for 3 or 4 months, we're getting nowhere.
yeah,
you know Following our qualification, we're just getting red flags. We keep
yeah.
meeting the same guy or gal. They keep on talking about how excited they are, but nothing's happening here. I think we got to move on.
Yes, I think you have to know when to call it quits and
Yeah,
walk
when to
away,
call it
as you
quits.
say. And
Yeah.
and as you say, I think I mean, there are many asymmetries in the relationship between a startup and a large
Yes.
corporate, but one of
Yeah.
them is to do
Yeah.
with what powers your company. And as you say, as a founder, as an entrepreneur, you're powered by optimism, by passion for what you're doing, by emotional energy, as much as you are by um, hard facts and data.
Yeah.
And you have to be like that. There is no other way you
Yeah.
can be an entrepreneur except have those characteristics, like you're saying. But in many
Yeah.
cases, large corporates are not moved by enthusiasm, by passion, by emotion. They just want to see the data. They want to know what kind of a risk they're taking, and they want to see hard evidence that it's not going to, cause a factory process to fall over. And they want the
Absolutely.
technical validation. And everybody in a large corporate is, whether they believe themselves to be or not, are largely working to manage risk. And
Yeah.
if you're in a startup, you're not managing risk, you're managing uncertainty, and you're generating, passion and enthusiasm, and you're selling a vision
Yeah.
because you don't really have that much probably right now
Exactly.
to point at.
How,
So
rule of thumb, Steve, um, how many, based on how many startups would approach BP in a typical year, how many of them might get funded? How many of the startups that you would meet would get deals done, like real deals done, would realize their intention of striking a commercial deal with a group like BP? It doesn't
uh,
have to be an exact number, obviously, but
no,
maybe
I
as
mean, roughly, I can give you a sense of magnitude, right? So roughly,
yeah.
we would look in BP, and I'm sure it's the same at a lot of other corporates. That size, we looked at maybe between 1,000, 2,000 startups a year as potential
Mhm.
investments, as partners, as providers of solutions, as people we could do pilots with. Um, and of that number, I would say the number that we took through into venture capital investments or other modes of partnership and business, there's probably between 20 and 40 a year. So you can you can see the size of the funnel, and then the what trickles through at the
Yeah.
other end is, there's quite a dropout rate, as you'd expect. And I don't think it's any different than if you were doing the
Yeah.
same process in a financial investment fund. It's a
Yes.
similar odds.
Yeah. It is. It is. It is. But
But
it's
I
important
think
to, I think, no, sorry, go on.
sorry, Chris, I was just going to add to what I was just saying, which is, if we're talking about an investment perspective for a second, a corporate VC not only has to meet the criteria that any financial fund would have to meet in terms of the attractiveness of the investment financial,
Mm.
they also typically have to find somebody in one of the businesses in the corporate who will champion and sponsor that investment and be willing to put their hand up and say, yes, I will help deploy this, I will help provide the data that this startup needs. And so there's an extra layer there of work to be done. And then on top of that, you've probably got a more complex decision making process around signing
Yeah.
off on an investment or a purchase in a large corporate than you do in a smaller organization or a financial VC. So you won't just have one investment committee; you will have other layers of governance on top of that. Um, so it's
Yeah.
there are more layers to work through.
Steve, would the identification of that sponsor, would that always happen after the financial due diligence? Are there any situations where you would front load that identification?
Yeah, I mean where I've typically seen it work is in
Mm.
parallel, and in fact, the financial due diligence comes a little way down the line
Okay.
once you know that you probably can attract a sponsor in the business,
Yeah.
and you know that it's strategically relevant. So it's almost
Okay.
like, if anything, it's the other way around.
Yeah.
So yeah, but it that doesn't mean it necessarily takes a short amount.
Yeah. 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 What, I mean, you've met with a lot of startups, you've led an accelerator as well, so you've helped grow them too. What are the two or three areas you would single out for improvement? Uh, what do entrepreneurs need to do a better job of, generally speaking,
Yeah,
based on what you've seen?
I've already mentioned one of them, which is do your homework about the strategy, about the
Yeah,
company, and about as much as you can find
yeah,
out about where the pain points are. That's point number one. Point
yeah.
number two is something about clarity of communication, being able to, in a world where you're having a conversation with somebody who's got a full plate of other things that they are working on. You need to be able to, almost like a politician, land two or three key messages that will stick in the head of that person, such that they
Mm,
can then have a lucid and cogent conversation, and an engaging and selling conversation, really, with
mhm,
other people in
mhm.
the organization. You're arming them with those selling messages. And so, for a lot of technical founders, that's not necessarily something that comes as a straightforward, easy, obvious skill. And partly it requires some commerciality in those statements,
Yeah,
as well as technical explanation. And for a lot of engineers, technology people, and I count myself in that bucket as well originally, it's difficult for them to simplify because they want to say everything about their exciting idea. But it is a bit like the Winston Churchill quote of, "I wrote you a shorter letter if I had more time." It's not necessarily just an issue of polishing up your presentation skills, although that's not a bad thing. It's about doing the work to figure out what's at the heart of your messaging. What do you really want to
yes,
communicate and have understood about your idea and solution by
yes.
the other half of the conversation? So that's not a trivial sort of or superficial thing. I think it's
Mhm.
quite a deep thing. So there's communication. Um, I also think that there is a degree of expectation setting and coming into a
Mm,
conversation knowing that it might take a long time, knowing that it's not going to be one conversation and you're done, and a deal is going to appear tomorrow. That's almost never the case. with these conversations with
Yeah.
corporates. Um, I think again, I'm just referencing some of the things we said earlier very briefly, but being able to ask that kind of set of questions that I alluded to earlier, quite early in the
Mhm.
conversation, so you're not
Mhm.
getting strung along and knowing when to quit.
Yeah.
That's quite
Yeah.
often missing. Um, sometimes it's quite unclear as to how the idea, which may be super interesting, or the technical nugget that is at the heart of the company, translates into a deployable product in a corporate. So how is it going to integrate into your systems, into your assets? Um, can I convince you that it's going to be as hassle free, as free of disruption as possible for operations, not necessarily involve the IT organization in a huge integration project which is going to frighten everybody. So have you thought through all of that such that
Mhm.
you're arming the person? Again, it's about arming the person that you're talking to go out and have other conversations inside the corporate. So almost it's like, there's somebody from the innovation organization who calls up somebody in operation and says, hey, I've just been talking to the startup, they have a great idea, and that almost certainly the first response from the operations team is going to be, well, that won't work because it's we don't have any way of stopping the process, or we're not able to integrate that into our systems. We've tried that before, it doesn't work.
Yeah.
We've got
Yeah.
targets to meet, we don't afford any downtime, so no is usually the first answer. And you've got to be able to arm that person to at least have the initial thing rebuttals and say, well, actually no, it's not. They're going to make it really simple for you for X, Y, and Z reasons. They understand that
Yes.
you're a difficult job,
Yes.
and here's how we're going to make it easy for you. But if they can't even have that conversation, then it's hard to see how it progresses. So you've got to be
Yeah.
constantly arming people with these selling messages, with these
Yeah.
deployment messages, and all the rest of it.
Yes. 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 I mean, these things, speaking to you now, listening to your observations, one would think one could be forgiven for thinking that these are fairly straightforward and obvious areas. Part of solution selling or strategic selling, almost common sense in terms of two businesses coming together to understand if there's a landing zone where an engagement can potentially play out. But from the sound of it, we're not getting to that stage very often where people are as prepared or as skilled to be able to handle even that.
No, I think that's fair, and I think it's like I said right at the top of this conversation. Complex B2B sales into
Yeah.
large corporates is a
Yeah.
specialist area. It's hard, it's difficult, and it requires a host of skills and some luck in order to make it
Yeah.
work. And it takes time. And quite
Yeah, it
often,
does.
startups are under a lot of pressure, time pressure, because their cash is running out, because their boards are and investors are banging the table for sales and evidence of
Yeah.
product market fit. It's hard, and there's a reason why it doesn't happen that frequently, and these relationships don't
Yeah.
easily translate into success
Yeah.
because
No, that's right.
it's a skill, and it's a hard thing to master. Which
Now,
probably actually
Steve.
interestingly, sorry, Chris, there's something just occurred to me that
Hmm.
the ability to hire into your startup, this is obviously your specialist subject, but the ability to hire into your startup somebody who has some capability and understanding of the world of complex B2B selling is something to consider even at that stage. I think. But you
Mhm.
probably have a better feel for that than I do. Actually.
Well, I think it's interesting. There's the deep tech world and the lab to market worlds often get their guidance from software worlds. And in terms of, well, what does it take? What are the rules we should apply when building a business, or the frameworks or the guidelines? Well, let's copy those over from digital and from software. And so one of the common themes that we come across a lot is founders, CEOs should go out and be the first salesperson because they can articulate their value proposition better in theory, principle. They can go, they should be going out and having a lot of these early discussions. The issue, especially in deep tech, as I'm sure you have found too, is that so many of these founder CEOs are straight out of uni. Or maybe they've had a little bit of experience, but it's not,
Yeah.
they're by no means senior. And so in a lot of cases, they just haven't had that experience yet. They may, they're typically visionary and brilliant in a particular space, but their professional career
Yes.
is still immature.
And yeah, I think
So
you've hit on the subject there, potentially a whole other podcast or series of podcasts, which is let's not treat some of these, if we're talking about deep tech or at least partially hardware oriented businesses, clean tech businesses, let's not treat them by the same set of rules that B2B
you
SaaS
cannot,
companies have used to be successful. It's not the same set of rules, it's
no,
not the same
it's
business. And
nowhere near,
see it time and time
nowhere
again.
near.
So we need to invent a
Absolutely.
different playbook for this, and um, it's coming, but it's not. All the books that have been written have not been about this so
No,
far.
no, no. And we need precedent. We need to see thrive. We need to see these types of companies build, scale, and thrive commercially so that we can learn from them. And we need to have the cycle just like we did in software. We've had that. We have precedent in software. We don't have it in a lot of these other much more complex areas.
Yeah.
We'll get there. We'll get there, but it's going to take some time. So we can't have the same rules. What was, let's go to Launchpad, for a
Mhm.
second, because this picks up on obviously all of this. And you were running Launchpad for a while within BP. Tell us a little bit about the thinking there, because obviously you were helping to shape these young companies and
Yeah.
invest in them and give them kind of life. What was the thinking behind the shaping of them and the development of these businesses?
Launchpad was an attempt to create a construct that was owned by BP, funded by BP, and could consistently scale companies from product market fit to the kind of 100, $200 million revenue type of organization that would then be substantial enough to withstand
Yeah.
some of those processes that I talked about. And so, we did a lot of work in the run up to setting up Launchpad with a peer group of other European blue chip companies from all sorts of different sectors: healthcare, transport, telecoms, stock
Hmm.
exchanges, but people who are essentially tackling the same problems. How do you transform yourself from within and grow businesses inside your corporate? Um, and then we work quite a lot with McKinsey, who
Yes.
has done some really good thought leadership and experiential hands-on stuff around sort of scaling corporate innovation. So between all of that and some of our own thinking, obviously, we came up with the idea of Launchpad, and I think we set it up as a subsidiary of BP, so it was somewhat arm's length, still connected to the mothership. But what that allowed us to do was to set up different culture, different set of processes, ways of working. We could choose to opt out of certain ways of working that were appropriate for a large organization managing risk, like I say, but totally poisonous if you're trying to scale something really quickly. Um,
Yes.
and so we tried to strike a balance between the things that BP had that were both necessary and relevant: its code of conduct, its legal procedures, its safety processes, and the operational assets and experience and expertise inside the company, its supply chain, and so on, all the good stuff. We tried to have our cake and eat it, have all of that cake, and be able to, at the same time, create more agile processes and more entrepreneurial environment within which
Yeah.
um,
Yeah.
companies could feel like they were able to make progress rapidly and not be encumbered by you know the typical entanglements of a large corp. So that's what we were trying
Yes.
to do.
Yeah.
Um, I think some elements of the construct were really successful. Others, I mean,
Yeah.
we just learned an enormous amount along the way. We made a lot of mistakes. Um, we had some good successes in terms of some of the companies. Now, I mean, I should say that some of the companies that we were attempting to scale were spin outs from inside BP. Some were um, previously part of the venture capital portfolio, so minority investments that we then took majority position in and moved. And some were acquisitions from the market of early stage companies. So we all three
Okay.
routes brought companies into Launchpad.
Yep.
And we built a portfolio of seven companies. A
Of
lot of
70.
them, seven,
7 companies. Yep. 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 Yep.
seven, because
That sounds more
because
reasonable.
it
Yeah.
was beyond the VC stage, and so we were investing a lot more money in those companies than in VC investment, and um, we felt like, because they already had product market fit in cases, that there was less risk involved. So yeah, the portfolio was never intended to be huge. But we took that portfolio from not very much to over $100 million of revenue by the time that I was there. I think it was really important. We talked about sponsorship in other contexts in the large corporate. So earlier bit of the discussion, but we had some very strong sponsorship when we started Launchpad from BP's deputy CEO at the time, and that helped us enormously in terms of knocking down barriers and so on. And then I think a lot of things conspired inside BP to make life harder. Once we reorganized, we then went through a transition into a new leadership team, new CEO, no deputy CEO anymore. The champions that we had disappeared, and so the sense of ownership that senior team felt around Launchpad, what we were doing, wasn't there. That's a big
Mm.
problem in
Yeah.
so
Yeah.
we didn't make Launchpad resilient to that sort of loss of sponsorship, if you see what I
Yes.
mean. Um,
I do.
I think like I said, we learned a lot about
Yeah.
how to
What were
best
some of the big
support a program.
lessons?
The biggest set of lessons that I learned were about people, about making good hiring decisions,
Yeah.
being really thorough about um, how you set culture, how you keep culture alive,
Mm.
and it's very difficult to create a culture from scratch in an organization, and then keep it quite distinct and separate from the corporate culture, which is always trying to come in and sort of um, take over, and that's enormously hard to do. To sort of set up an island of slightly different culture. Um,
Yeah.
but yeah, it all comes down. It all comes down to people, and you know, um, making rapid, effective decisions about people, carrying them out, whether that's promotions or deciding that somebody's not right in a role.
Yeah.
And this is all your territory, Chris. So you know about this,
Yeah, it is. It
but it's
is. Look,
where
and
it's
these
where
aren't.
things fall over and over again.
It is. It is. I mean, it's so. And look, and Steve, thank you so much for sharing that. That's hugely insightful. What it was bold what you guys were trying to do. It was really bold for a corporate to say, "Hey, let's go see if we can scale up some of these businesses super fast, get them to operate in accordance with our practices, so that we can create those proper growth stage companies, but we can accelerate the
Yeah,
growth of them." And I
yeah, and
think,
we showed that we could. And then we had
yeah, yeah,
we
yeah.
had a
So,
couple of super successful companies. So
but there's not a lot of precedent with that kind of accelerator. Most of the time we hear of accelerators, we're talking about very tiny businesses or groups of people who come together to form businesses within the
yeah,
accelerator. And then we'll give you, Y Combinator, Entrepreneur First,
yeah, and this is a lot later
Deep
stage
Science
those
Ventures,
companies as
these
well.
guys.
Yeah, yeah,
Yeah.
yeah. So
So, to do
we're
it at this level is I think quite bold. And you've got a real shot. So, in especially doing it at the time when you were doing it too, we had COVID as well.
yeah. I mean,
So COVID
we
was on the
built a
march as
lot of
well.
Launchpad in lockdown.
And yeah, in COVID times. So, but
Yeah,
it's, the people challenges are, businesses are groups of people. Um, at the end of the day, they're groups of people. And so if you struggle managing people or leading people or thinking about people or dealing with people, you're going to struggle in business.
Yeah.
But and it's the hardest thing in the world.
Yeah.
But
It's the it's the it's
you
the
know,
rapidity of making the decisions and moving
yeah,
people in or out of roles that I think
yeah,
was critical, and we just didn't do
yeah,
those things quickly enough.
yeah. I've spoken to so many other executives and non-executives, and that seems to be a recurring lesson. We should have moved faster.
Yeah, I don't talk to
I
many
don't think I've
people.
ever met anyone. I don't think I've ever met anyone who said, "You know what? I think we got rid of him too quickly. I think we should
Yeah,
have held on." I've never encountered that.
no, it doesn't happen, but it never feels like the right thing to do in the
Yeah.
moment, and
Yeah.
that's why you need in many cases, a great people person right alongside you
Yeah.
to speak truth to you
Yeah.
as you're wrestling
Yeah.
with those decisions. But also, you need a good board, or you need a good group of people
Absolutely.
um, that can provoke those
Absolutely.
discussions at the right time.
Yeah. 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 Steve, I could keep on talking to you and listening to you all day. Look, thank you so much for taking this afternoon and spending this time with me. It's been a great chat, and I've learned a lot. So thank you.
Thank you, Chris. It's been a pleasure.
You've been listening to the Lab to Market Leadership Podcast, brought to you by Deep Tech Leaders. This podcast has been produced by Bauhaus. You can find out more about us on LinkedIn, Spotify, Apple, or wherever you get your podcasts.